Hi, it's Rosa Collado, and I'm so excited because I'm going to be having an event on June 12th alongside Michael, and we're going to be talking about how to purchase auction home property. And I have this video full of so much information, so make sure you watch the entire video. So, Michael, the hard money lender, thank you so much for coming here today. So, let's go ahead and jump right in, Michael. Tell us a little bit about yourself.
Hi, Rosa. Thank you for having me. So I'm a fan of yours, believe it or not. I just want to admit that I've been following your videos for a while, and you actually really give so much helpful information. I'm honored to be here. Thank you for having me again. So I'm Michael, the hard money lender. I've been doing private money, hard money for about 10 years now, and I specialize in helping real estate investors do fix and flips and fix and refi to hold. I consider myself one I would say the one of the better lenders in the business, not because of rates, not because of pricing, not because I really do care and I want everyone to be successful, and I try my best to educate my clients on how to get the best loan and what they could do to make terms better for themselves.
I vouch for that 100%. One thing I love about you, Michael, is that you take the time to answer all the questions. And I love that about you. And that you can't really find in this industry because a lot of individuals, their mindset is, how can I make money? How can I make a commission? So I am so grateful that you're giving me your time, not only to me, but to everyone here to educate us, especially for these investors that are looking to purchase home for the first time. They're like, you know what? I already own a home, or hey, I want to go ahead and buy a home. But the first home that I purchased, I want it to be a great deal. I want to buy a property that is properly distressed or probably a home that I can buy through an auction. And that's why I'm having that event on June 12th alongside with you, Michael. So if people have more questions, they're going to be able to see you in person that day. So, Michael, I'm going to ask you the first question. I'm going to jump right into it. How can someone qualify for a hard lender loan?
Okay, so the first thing we care about is if the deal makes sense, right? We care about knowing the numbers, what price you're buying it for, around how much will you need to fix it up, and how much is it worth afterwards, right? So with those three numbers, if it makes sense, there's a profit in it, that would be good.
That's awesome. Now, when it comes to, well, you know what? Let's start all over again. What is actually hard lending? What is that? What's the difference between a hard lender loan and a conventional or a regular bank loan?
Sure. Well, we design our whole business and all our loan programs to actually help fill a void, because the banks don't do everything. Ideal loan for a bank would be someone that wants to buy their primary home or maybe a secondary home for the weekend or vacation home, right? And our specialty is to help real estate investors that want to buy a distressed property. They need the money quick, and they don't want to have to worry about, well, I get the deal, or will I get the loan, will I get it fast enough, will I have money to fix. So we don't really compete with the banks at all, because they actually like our properties after our investors fix it up, and then they sell it to a future homeowner, right? So we do work hand in hand. We take care of the off the market real estate, like what you do, off the market real estate for real estate investors to help the property get on the market.
Awesome. So now let's just say that somebody is looking to they found a home and they're getting an amazing deal for the home. Let's start using an example. So let's say that they found a home for 500,000 in the area of Ozone Park. The house can actually sell for $1 million. And the house just needs some updating. They probably need just a new kitchen, a new bathroom on the two floors. And let's say the maximum that they'll probably spend with renovating will be about 100,000. What would that be considered a good deal?
Yeah, just for taking a quick glance at the numbers, yes, absolutely. In fact, based on these numbers you're giving me, you won't even need the house to be worth 1 million. If I'll give you a quick example. If you give me, let me use my calculator for a second.
So
Um,
you're using
so
your
this
calculator.
is a very strong deal.
It's a good deal. And while you're using your calculator, I just want to kind of let people know that sometimes they reach out to bankers or hard lender and they say, you know what, I need a day or two. Look, Michael's giving us an answer. He just needs a few minutes to give us an answer right now on the spot. So you see the difference. You need to make sure that you're working and connecting with the right individual, especially when you're looking to invest in a property, especially whether it's an auction or a distressed property.
Okay, so back to what we're doing here. Even if this house is worth 900,000, it's still a very strong deal. Yeah, we would definitely do this deal. A 1 to 4 family house, buying it for 500,000, needs about 100,000 in renovation. It's worth 900 and up. That's a great deal.
Great. So let's say, so it's a great deal. And let's say I'm a new, I'm a new investor. I started from scratch. I have, some extra money that I want to go ahead. How much money would you need for me to get this loan from you, to get the loan from you so that I can have, I can purchase the home?
For a novice investor, they need at least 25% down. But we'll supply all the construction money, renovation money for them. So of course they need some money for closing costs and some holding costs and unforeseen things and maybe some money to get their contractor going. But down payment wise, altogether at the closing table, 25% down should get it done.
Right. So if the house is worth 500,000 and you're saying 25% down, that's about $125,000. Now, what would you say? Would you say probably have about 200,000 just to be safe with regards to the closing costs and also to start the renovation?
If I was talking to somebody that just wanted a rough idea of how much cash they should have to do this entire deal,
Hmm.
yeah, absolutely. You said about 200,000? Is that what
Right,
you said?
about 200 to start and for the closing costs, a down payment.
Yeah, that's a good rough number. Absolutely. Yeah, because there is closing costs, there's holding costs, money to get the contractor going, and all the other things you need to pay for, like maybe your property insurance and everything. Sure,
Got it.
that,
All
that
right, so
sounds.
let's say that you have, let's say that you have maybe 50,000, right? Are you able to add other investors alongside with you? So now you're maybe partnering up with a few friends and family. Can they do that?
Yeah, so like other mortgages, you can bring in a co-signer, a co-guarantor, another partner in the deal that if they bring something to the table that makes the loan better, yeah, absolutely. So one of the things that a lot of my clients do is, they do have joint ventures and they do bring in partners of experienced investors. Sometimes they're realtors, that are investors. Sometimes they're general contractors that are also investors. So yeah, someone with a track record, a track record of doing similar fix and flips already, with experience. What we'll do is we'll take whatever good the partner with maybe the better credit or the experience, and we'll mesh it all together to because we'll look at the whole picture. We use common sense, of course.
Mhm. And
So a experienced borrower buying the same deal or bringing in a partner that has experience doing this, yeah, it would be 90% purchase price, 100% renovation, meaning the down payment altogether at closing would be 10%, would be
wow.
50
So
grand.
that's a big difference. And I also do like the fact that you're saying even if you don't have an investor that you've worked with in the past, right? And you want to put 25 and you have to put 24% down, you're still able to bring your family and partners. You can do maybe what? Can we do up to 3 people in that, even though they're first time investors and put 25% down?
Oh, yeah, sure, absolutely. So, yeah, now fact, a lot. When we do these loans, we want to lend to a entity, corporation, LLC. So it's very common for an entity to have many owners. That's fine with us. Most very successful investment companies are a team of people, so that's not a problem at all.
And that's why I'm doing this event on June 12th, because I want to start partnering people together, because not everybody can do everything alone. So if you have the right connection, the right people, you can go ahead and buy a great deal versus letting the deal go because you don't have all the money, you can partner up with other people. Maybe somebody that has the money, maybe someone that has the credit, maybe somebody that's done this in the past. You can partner up with those individuals. So let's go ahead and say a new investor, you're saying, okay, I have the 25% down. I have 200,000. I'm going to go ahead and move forward with this property. Do I need to have credit? Do I need to have a job? What are the deep requirements? Are you requiring me similar to a regular bank?
That's an excellent question, Rosa. And that's one of the benefits of using hard money. We underwrite different. We'll focus on the deal, and we all focus on the profitability of the deal and who's borrowing the money. So we don't underwrite and don't make a credit decision based on your debt to income ratio like most other mortgages well. So and as simple as I can say it, you don't need personal income. You don't need a job. You don't need to show us W-2s. You don't need pay stubs. You don't need tax returns. Um, so with that said, we're not very hypersensitive to credit, but we want decent credit. So meaning preferably, 650 and up. And also we don't want any recent credit events. So, no recent bankruptcies, no recent foreclosures. So a clean background, basically. So we're not asking for much. The deal makes sense. Close to 700 credit score, we're going to be doing business.
Wow. So all you're telling me is all we need to find people is a great deal. And if you find a great deal, you don't really need an income. You don't need to have, you're worried about your dad. All you need to have is good credit. Obviously, that 25% down if you're a new investor, possibly 10 to 15% if you're already a seasonal investor. Now you mentioned a little bit about getting 100% renovation loan. What does that mean, 100% renovation loan?
That's another great question. So I'm going to get into a little more details about it. So everyone knows what to expect if they, do a fix and flip loan. So remember I was saying, for a borrower, a new borrower would do 75% of the purchase and 100% renovation. So meaning, before you bought the property, you gave us your renovation plan, right? And how you're going to spend this $100,000 for. Maybe you gonna do a new roof, you're gonna do some electrical, you're gonna do some plumbing, you do painting, new kitchens, new bathrooms. So as you gave us the plan. As you do the work, like you call us up and say, hey, Michael, we got the demolition done and we already did the electrical and plumbing. So we'll reimburse you for the work after it's done. So yeah, we're not gonna give you in this scenario, we're not gonna give you $100,000 at the closing table and hope you get it done to protect us. And very similar to other construction loans and bank loans, we'll reimburse you as the work gets done per line item.
That's awesome. So the whole thing is you're going to be able to 100% get reimbursed back for each time that you're doing work. So it's like, what better deal than, hey, not only are you getting the loan and you're getting, let's say, 75% loan, but you're also going to get 100% back of the money that you're spending on fixing the property. So this is a great loan for a lot of people. Now, I would love for you, because I know you've been doing this for a while. I don't want to date you, but I know you've been doing this for a while and you're one of the best that I know so far. That's why I brought you here, because I try to bring you guys the best. That's why this event on June 12th is major key for people that are looking to success in real estate. So can you give us some tips for people that are looking, they're a first-time investor, they're looking to do fix and flip, they're looking to maybe buy a home in an auction or just a distressed property? What are the tips that you're giving this individual that they're first-time investors?
Well, the first thing I would say, the most important thing is know your values, right? If you decided, you know, how much work around, whether it's a big reno, light reno, and around how much you think you could buy it for, know how much you could sell it for, the after repair value. So I do think one of the most important things to be able to move quickly, because I do notice that sometimes a new investor would take a long time to figure out these numbers, while a seasoned investor sees a great deal like this and he's getting this in contract and locking it up probably the same day, while the new investor comes back a couple of days later. Hey, I want to buy that property for 500,000 because I know it's worth almost $1 million. Sorry, it's too, it's gone already.
And that's
So
why
those
it's
values.
so, and I was going to say, that's why it's so important to connect and partner with the right people, because by you partnering, you're going to be able to get some major deals. What are some, let's say, what are some what is a major, other than them not knowing their value, what is something that you see a lot that new investors are doing incorrectly when they come to you?
They don't have a team in place. So meaning you don't, if you have a realtor partner that can actually just help you with your values right away and also going to help you sell the property, you already know who your attorney is going to be. You already, you already know who, if you who your contractor will be, or at least have a couple of contractors lined up. Because if you're scrambling for these things and you're trying to put your team together, after you already found a deal and won a loan, that makes us uncomfortable, right? So I really believe you should have your realtor in place, you should have your contractor in place before you even decide to buy a property. The
Okay.
other the other thing that I noticed, they don't want to tell me everything that we need to know. Like they might leave out something like, I forgot to mention I have a foreclosure from like 2 years ago, or they forget to, or they don't want to tell me a better idea where the credit score really is. So I have great credit, don't worry about it. And then we pull the credit and find out, there's something we could avoid it, right? So yeah, just tell me what I need to know. Give me accurate information, and I could give you more help.
So what I'm hearing from you is be truthful is a major key, and knowing what you're getting yourself into, and just have everything, have a team together. Again, that's why I'm having that event on June 12th and why I keep mentioning that event. So I would love for you to walk us a little bit through the process, Michael, right? So now we went ahead, we got the property, they're getting the loan. How do they even get the loan in the first place? Can I just say, hey, Michael, I found this house for 500,000. I have $200,000 in my bank account right now. Give me the difference plus the 100%. Do you just mail me a check or what happens?
Okay, well, almost that simple. I try my best to make it that easy. Um, Usually it's a 5 to 10 minute phone call, right? In the beginning, just call me up, text me to let me know you need to speak and give me the information. Tell me the address, tell me the property type, how much you're buying it for, how much it's worth, around how much you're gonna need to fix it. And within minutes, I could let you know if everything works for us, right? If the numbers make sense, that's great. Then if I don't know you, I'll pre-qualify you real quick. Hey, around where's your credit score? Around how much money do you control to do the deal? And I say control because it doesn't have to be in your bank account. It doesn't have to be your money. And the reason why I asked that, even though I'm not going to ask you to show me bank accounts, and I'm not going to ask you to show me the money. I just want to make sure you're realistic of how much you need to do the deal because I don't want you to have a problem, right? I just want you to be successful. So if you answer those questions, right after that, I could tell you, your rate and terms.
Awesome. So let's say that we got that all straightened out. Does the bank have to come and see the property? What's the process with the bank to lend me the loan? And how, what's that process? Do they have to come inside? Do they have to see that the property, that there's water running, that there's electricity, that what do you need? What does the bank need to give me that loan?
Yeah, if I mean, we sometimes we do desktop appraisals because sometimes at the auction, if you're buying a foreclosure, there's no access, or you know, you know, if possible, yeah, we'll have a third party appraise the numbers to make sure the values you presented us make sense, right? So they'll confirm, the after repair value, and that usually takes about a week. So we'll order appraisal, and we use your scope of work of your renovation plan to help determine that after repair value, and I have a third party do the same.
Okay, I just want to go back because I want to hear you right. So you're telling me that if I'm buying a home through an auction and let's say we cannot get access, you guys are still able to give us a loan?
Well, if it's a auction foreclosure, right? There's no legal access yet until you become the owner. So legally, we should not be able to get in there. If it's a bank owned property, yeah, usually sometimes there is access. But if there's a legal reason why we can't get inside, we'll have to do a desktop drive by. But we would prefer to have a partner on the team that has some experience because it's a whole. I mean, I watch your videos all the time. It's a whole nother animal evicting and
It
getting
is,
someone else.
especially here in New York. They've changing things, and people are like, "Oh, this new squatter rules." There's so many things, guys, that you have to learn, and I'm going to have more video on that. But now, what I would like to go a little bit back on is now we found the deal. We're going ahead and we're moving forward. and it's taking time. How long normally are these loans for? Are they for 10 years, 20 years, 30 years? How long are these hard lender loan for?
Okay, so when you call me up and you apply for the loan and you give me the information and we decide to do it and we order appraisal, the whole process should take 10 days to get you to the closing table if everyone works at a normal pace. But the term normally would be a 12-month term. And I'm glad you asked this question because to make the loan more beneficial to the clients, because normally it only, how long you think normally that average from the investors you work with to do a light renovation like what we're talking about here?
Usually, if they're an expert, about 3 months or so, 3 to 6 months.
Right. And then you as the expert realtor, how long to get it sold?
It takes me about, let's say we can get it sold within a month, but still we need that 45 to 60 days with a regular bank. So again, we're looking at another 2 to 3 months. So we're looking at what, roughly about 6, 8 months to maybe a year. Yeah.
Sure. So in this situation, yeah, maybe 6 to 9 months, right? So the loan is a 12-month term. It's only pay as you go. So meaning, let's say, just for rough numbers, let's say the rate was, just making easy math, 10%, right? You paid us back in 9 months. You know, you pretty much, only paid about nine, well, actually less. Let's do some quick math here.
I
If you
love you
paid us
with the
back in
math.
6 months, you paid 5%, right? So if you paid us back in 9 months, pretty much you paid about 7%, right? Um, so because the loan is pay as you go, the quicker you pay us back, the less money you pay on the yearly interest. So this comes in really handy, especially with someone that has a light rental, because light rentals are usually in and out in 6 months. So don't let the interest rate scare you if it's a quick deal.
So let's go ahead again. I'm backing up again because again, this is for new investors. They don't know a lot. Let's just say that I found the property, right? And I'm going to keep it for, let's say, 9 months where we are, right? Because you're saying 9 months, you're just paying them back 7%. How much am I paying monthly if I'm getting that loan? Am I paying principal interest or am I just paying interest? What exactly is somebody paying every single month?
It's interest only.
Wow. You hear that, guys?
Um,
Interest only.
yep, it's interest only, and you just pay us back, the principal after when you sell the property, pretty much. So it's perfectly designed for a fix and flip. That's why we call it the fix and flip loan.
And that's why there's so much money to be made in fix and flipping right now. If you're with the right team. Again, I'm going to say June 12th, I have this event. You have to be there if you want to get educated. And again, you're getting a loan interest only, which is a great deal because at the end, you're going to get so much profit. You're going to pay back, Michael, and you're going to use that money to, guess what? Purchase another home. Um, Michael, a lot of people are thinking, you know what? I did great work. I am now in love with this house. Yes, I was thinking about fix and flipping, and now I want to keep the home because I love it, or my wife love it, or my husband love it, or my kids love it. What can you do in that sense? What exactly can I get done if now I want to keep it versus, sell it versus selling it now?
Well, when we originally agreed to do a loan, we liked it because it was profitable, it was a strong deal, and it made sense as a investment property. So it's quite common for people to decide, yeah, I love the home, especially after I renovated, we want to keep it. So you could, go ahead and go get yourself a traditional mortgage, right? And pay us back. And then you can move in the moment you pay us back.
Got it. And you know what I love about working with you, Michael, is that you also are able to help us do that right away. So we don't have to scramble looking for a bank. You're also able to help us get, refinance and now get them into a regular loan. Is that right?
Well, most of my yes and no. Most of my clients do investment properties, so they like to refi and put tenants in there, collect rent. Like the Burr method that everyone talks about all the time. And if they decide to make it owner occupied, I would refer to a partner of mine that handles the owner occupied, the primary mortgages. Right. I specialize in the investment properties, and then I would have to refer to a partner that handles primary homes.
Yeah. So let's go back a little bit. You're saying that you're also able to help them if they decide that, you know what, I want to keep this property, rents are going through the roof. I spoke with Rosa. Rosa's telling me she can get me a great tenant on that property and I'm going to be profiting, let's say $5,000 a month if I keep the property. How are you able to help them then if they decide to, instead of selling it, now they want to keep it and rent the property and keep it as an investment for rental?
Okay, so and that is what happens most of the time, especially for a two family. So let's use the same values, right? Just so I can give you a quick example. You bought the house for 500,000, you spent 100,000 fixing it, and after repair value, what number do you want to use? Uh,
I still want to, let's stay with $1 million just because I like the
okay,
$1 million.
sure. So again, it's another one of my loans that doesn't require personal income, no tax returns. I'm lending the money to your business, so it won't even show up on your personal credit report. So we'll lend you 75% of the value. So if the property is worth $1 million, that means the loan amount would be 750,000. Let's say that again. If the property is worth $1 million, the loan amount on the cash out refi would be 750,000. So if you bought the property for 500,000 and you put 100,000 into it, now everyone's thinking, wait a second, that's more money. Yes, whatever extra money will go into your hands. We'll pay off the loan, and everything that's left over goes to you.
Wow, that's awesome. So if you go ahead and decide to stay with the property, whatever is left, you can actually use that and invest on another property. So as you guys can see here, it's endless opportunities that you have when you're working with the right team, especially if you're looking to fix and flip and you're a new investor. I would highly recommend you to sign up for an event that we're having on June 12th here in Maspeth, Queens. We're going to have appetizers. We're going to have a panel that are already investors going over how to do this the right way. We're going to have free appetizers. We're going to have parking. We're going to have a live DJ so we can dance, network, an open bar, not an open bar. Sorry. It's going to be a cash bar. You're going to have Michael there. Michael's going to answer all your questions. I'm going to be there as well and answer all the questions that you have. Michael, I want to say thank you so much for your time. But before we go, I wanted to ask you one more question. What is a question that you don't get asked that you believe people should ask you if they're a first-time investor?
A lot of times they don't ask, um, how much money do I need to do this, right? They're very focused on how much down payment they need, and if you don't do this on a regular basis, maybe you're not good at estimating all the closing costs because you don't know what's going to happen, right? So they're not asking me for my suggestion of how much reserves they should have also after closing, right? So if you when you bring me the situation, most likely, I would basically start telling you this thing, especially if I know you don't do this on a regular basis. And a lot of times they're really surprised. Whoa, I didn't know I needed all that money for closing costs and holding costs, money to get the contractor going, and some reserves.
So I got it. It's really important to do that to make sure that you know how much money you need to start. And any advice you give anyone that is a first-time investor, they're really thinking about doing this, they're a little bit nervous, and they have a little bit of money, what do you recommend them to do to be successful if they decide to do this? Because a lot of people think, hey, I have to do this tomorrow. Maybe they can do 6 months or a year. So what do you recommend somebody? A big tip for a new investor.
Number one thing is get a great realtor to make sure you know the values. Okay, a Rosa would be perfect because if you don't know the values, you cannot move quick, and you won't be able to know whether you have a good deal fast enough to grab the deal. The other thing is get pre-qualified for your hard money loan in advance. It's only a 5-minute phone call, and then you'll get issued a proof of funds, which you could show to realtors to get properties, and you'll know how much money we're willing to lend you in advance. What that makes sense for what you have, to use. So if anyone needs my phone number, if you don't mind, I'll just give
Yeah,
it out
please
here.
go ahead.
Okay, great. So feel free to text me and schedule a call. In a 5-minute phone call, I could easily give you a pre-qualification to tell you what your max loan amount will be. So text 718-812-2222. 718-812-2222. Just text me that you want to schedule a call, and you'll be surprised how quickly I respond.
Awesome. And guys, if you have any questions about real estate, let's say you have a deal already and you're not sure if it's a good deal, you can go ahead and give me a call at 917-833-0582. You can go ahead and text me. And just so that everybody know, what Michael's doing is completely free. So he can pre-approve you free. He's not going to charge you money to speak with you and to pre-approve you. I'm not going to charge money to speak with you and to tell you if the deal that you have is a great deal. So again, we're here to provide you with services. We're here to provide you and educate you the right way so that you can make the right decision for you and your family and you can build your legacy. I would love to see you there on June 12th. Please sign up on the link below, register. It's really important for you to be there with the right people and build the right connection, build the right knowledge so that you can do the right thing for you and your family. Thank you again. Michael, I am so honored that you're here. I'm so grateful for all the information that you provided. I know that you do this on a regular basis, but your time here was valuable. I learned a lot. I'm sure a lot of people learn a lot because not everybody's sharing this information. People like to hold back information, and I'm here to share as much as I can, as well as Michael here. So again, thank you so much for your time today.
Thank you, Rosa, for having me. And again, I'm a fan of your channel, and it's a great honor for me to be here.
Thank you. I'm a fan of you as well. Thank you. I'll talk to you soon.